JJ the CPA here. Hope you're doing well. 28 years I've been in the business of preparing and planning for taxes with my clients, still in the trenches doing it every day. A big thing that I'm working with every single one of my clients that has employees is the employee retention tax credit. If your advisor has not talked to you about this, then you should question their value. You should call them and ask them about the employee retention tax credit. If they blow you off, if they say that your payroll company has to take care of it, I want you to fire them as fast as you possibly can. I don't care how long you've been working with them, because that is a lazy advisor and they should not be your advisor. The employee retention tax credit is a massive payroll tax credit. It is now available to those that got PPP. It is retroactive back to 2020. And in 2021, it is sweet as honey in terms of being able to take advantage of this employee retention tax credit if your gross receipts are down. There's a lot of misconception out there that you have to be a non-essential business, or if you're an essential business, you don't qualify. That is only true if you're trying to qualify for the employee retention tax credit due to a government shutdown. So if you have a time period that your business was in a government shutdown, then whether you're essential or non-essential comes into play. But I'll tell you this, there are so many ways that an essential business still qualifies. Period. The other way you can qualify is if your gross receipts are down, which has then nothing to do with whether you're an essential business or a non-essential business. All it has to do with is, are your gross receipts down? In 2021, the gross receipts only need to be down 20%, and you're comparing that to the correlating quarter in 2019. Hear that correctly. You're comparing 2021 to 2019. Do you even know what your gross receipts were in 2019 quarter by quarter? Most of us probably don't off the top of our head. You would need to look. So you should be looking. And the employee retention tax credit for 2021 is now available all 4 quarters of 2021. So if your gross receipts are down at least 20% when comparing first quarter 2021 to first quarter 2019, all the wages in quarter 1 qualify. All of the health insurance that the employer paid qualifies for the employee retention tax credit. Now, it is limited in a couple of ways. It's limited to per employee for the quarter of $10,000 of wages and health insurance. And if you have owners that have more than 50% owner, family attribution rules apply. They don't get to, those wages are not included. And then the tax credit is 70%. I should have said that in the first 30 seconds. I'm glad you made it to here. 70%. The IRS will send you a check or a refund, or you can reduce down your next payroll deposit, and 70% of your payroll would be covered by this payroll tax credit. So you take all your wages, all the health insurance that's paid in the first quarter, this is an example. It's no more than $10,000 per employee, and then you take it by 70%. Many small businesses don't have employees that they're paying more than $10,000 in a quarter. Okay? There's many small businesses that most of the employees are making way less than $10,000. So that means all those wages, all that health insurance, times 70% is a tax credit. I mean, if you have a small business and there's 4 employees, they each make $1,000 a month. So that's $4,000 a month of payroll. That's $12,000 of payroll in a quarter times 70% is $8,400. Tony D, I got it. $8,400. And guess what? It starts all over in quarter 2, starts all over in quarter 3, starts all over in quarter 4. If you had an employee that made over $10,000 in a quarter, so all of their wages up to $10,000 counted in quarter 1, and then it counted again in 2 and 3 and 4, that would be a $7,000 tax credit for that one employee that the employer gets. And it would be for each quarter. So $7,000 per quarter tax credit times 4 is a $28,000 tax credit. Even if your head's spinning, I want you to really look at this though. Okay? I've got a whole playlist. I'm going to give you a link to it. And I've done a seminar. And if your advisor is not sure about how this works and they want to look into it with you, all right, I like that. I'm glad. The seminar, I give you examples. You get to go through a multi-hour seminar with a PDF and Excel spreadsheet, and I lay everything out A to Z. If you have to amend the 941, et cetera, et cetera, et cetera. But the best thing you can do is just go to your advisor and have them do it with you or for you. If you have a payroll company and they've sloughed you off, fire them as soon as you possibly can. Get with another payroll company. I don't care how much of a bother it is for you. Find the right time, close the quarter, or get rid of them at the end of the year. You have a tax advisor that's putting you off on this. Okay. We've had deadlines, we've had PPP, we've had all the things that are going on. Now get in front of them. Get in front of them and say, listen, we got to tie down this employee retention tax credit. Listen, I have a handful of clients that we didn't know they qualified for the employee retention tax credit till the first quarter was over of 2021. And by the time they got their books closed, right? We didn't really know this until about May. And I said, guess what? You qualify. I got to get through the tax deadline, take a deep breath, and then we're getting after it. I'm going to be circling back with every single one of my clients and looking at first quarter and second quarter and comparing it to 2019 and seeing if the gross receipts are down. Because if the gross receipts are down at least 20%, then all the wages are going to count. Now, there's some caveats, okay? So if you're a restaurant, the amount of tip wages that are paid to the employees, well, that doesn't get to be included. You get to include all wages paid no matter what if you're 500 or less employees. So yeah, there's some little things that go into this. You can get the money near immediately by knowing what your credit is and reducing down your next payroll deposit. Or you can file a Form 7200, fax it to the IRS. They send you a check within a couple of weeks. Now you can only file that for the applicable quarter on or before when you file a Form 941 for the applicable quarter. Or you can put it on 941 and ask for a credit or a refund. Or if you missed all that, you can do a Form 941X. You got at least 2 years to go back and amend that. Don't miss out on this. Get in front of your advisors. If they're not going to see it through with you, they're not going to look at it. Or they're going to tell you that, well, because you're essential, you don't qualify. And they're not looking at your gross receipts and them being down. Get rid of that advisor. Fire them. This is huge amounts of money. I had someone leave me a voicemail a couple of months ago, John. And he said, I'm so glad I came across your video. I think he said it was around 5 a.m. He came across my video. Hadn't actually ever seen any of mine before. And I got up in the camera and said, fire your advisor if they will not help you with this. And his advisor said, you know what? You don't qualify for it because you're an essential business. So make your advisor tell you, though, why you don't qualify. Is it because of the gross receipts and you're not down enough? If they say, well, you're an essential business, have them explain that to you. There are so many ways that an essential business still qualifies during a governmental shutdown. But essential, non-essential has nothing to do with anything if you're qualifying because your gross receipts are down. So it's a complicated matter, yes, but this person said that on their first request to their tax advisor, the answer was, you don't get it, you're essential. After watching my video and then going back to the tax advisor and saying, well, can you explain to me, can you actually show me why I don't qualify? They came back and said, actually, it turns out you qualify. $410,000 that person got with the tax credit. You know, one of the things I want you to remember is that tax advisors need you to be in front of them. Okay? Now, this is one of those subject matters. Hopefully, they've put at least it in front of you to say, hey, there's this credit out there. You might want to look at it. You might qualify for it. Let's take a gander at it. You know, some kind of blanket email. That's what I've done. And then I have followed up with the clients. So guess what? Give your advisor the benefit of the doubt. Busy, pandemic, all that stuff. Okay? But if they're going to blow you off, if they're not getting it done for you, they're just giving you an off-the-cuff answer, it's not good enough. And you deserve more. You deserve to be with a tax advisor that they see their job as reducing down your taxes within the law to the maximum and having you qualify, receive tax credits to the maximum. The employee retention tax credit is the most misunderstood tax credit. It's the least, the IRS is not doing a good job of getting the information out there. So it's one of the least advertised, for lack of a better word, tax credits out there. The IRS's website, to their own admission, is outdated. I don't know why. Why? Because there's a lot of money that can get paid out on this. So I don't know if that's the IRS's motive. I doubt it. I guess they're just busy. I don't know what the deal is. They've extended this through the end of the year. The IRS hasn't put out anything here as the beginning of July here, talking about third and fourth quarter. Probably just need to do some kind of simple, okay, hey, yeah, it is continued. But the law has been written. The law is clear. It's through the end of the year. So here we are in July. Give your tax advisor, your payroll company the benefit of the doubt. But if they're not on this at your request, sooner rather than later, you need to fire them. You need to fire them. If they just say, oh, you don't qualify because of this, have them explain it to you. Have them explain it to you. Pay them for their time to show you how you don't qualify. So I'm glad that you've made it to here. Listen, if you're not a subscriber and you've made it to here, surely I've created some kind of value here for you. And so I would appreciate it if you would subscribe. I don't make any money when you subscribe, but I'm a CPA. I like numbers and I like to see the subscribers go up. Then I know I'm putting out good information, if you will, or at least helpful information. Am I a little hardcore? Heck yeah. You know why? Because I have a high standard. My client should expect a high standard. Don't be lazy and don't work with a lazy advisor. All right, hey, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. Have a great one.